Hello folks, and welcome to this week's edition of the Satori Traders Precious Metals News. Let's jump right into the charts. So our headline stock this week is Eloro Resources. And at this point, Eloro has completed 22 drill holes on their Iska project in Bolivia. Based on some earlier drill results, obviously investors got excited about this company and they ran the stock up from $1.70 all the way up to $4.50. And if you missed getting into Eloro before that move happened, it's psychologically challenging to buy a stock after it has done a big move like that. It feels like the stock has already made its move and I missed it. Fortunately, we've gotten a second opportunity. We've now had a 62% retracement from that high price there. And based on Fibonacci retracement, this is considered a healthy correction, a healthy pullback. And of course, expectation in the ongoing bull market that when the mining stocks resume their uptrend, that Eloro will participate and will do so after a healthy correction. If you were looking for an opportunity to get into Eloro, this might be a good one. Now, why would we be interested in having a position in Eloro? Well, like I was saying, they had already proven with early drill results that they were onto a significant silver deposit. The recent drill results released on February 23rd, it was a deeper drill hole and they discovered high-grade tin mineralization. And of course, tin is a valuable base metal. A lot of uses for tin where there are no alternatives. Solder, for example, in electronic applications and plumbing applications as well. Let's continue. One of the most compelling reasons to be interested in Eloro is the company's share structure. We can see here in their corporate presentation that fully diluted, the company only has 64 million shares. And of those shares, 27 million of them are tightly held by management and major investors. So this is definitely a tightly held company, which in part explains why price moved so dramatically. It's a tightly held stock. When investors realized that they were onto a significant discovery, price rose very quickly and dramatically. So that's enough about Eloro. I suggest that you put that one on your list if you're interested in the mining stocks. Here is gold. So disappointing action in gold last week, obviously, as price continued lower. We did get an encouraging candlestick on Friday. This is a doji candlestick. Price closed right at the 1700 level. So hard to say that it found support at the round number, and we also can't say that it dropped decisively below the round number. That candlestick is on the bullish side. What's really bullish in this daily chart of gold is the level of oversoldness in MACD. If we zoom out here and focus on MACD, we can see that this is back in the big scary plunge in March, and gold got down to that level of oversoldness in MACD. And then again here in late 2020, we reached that level of oversoldness again. Well, now in the current sell-off, based on MACD, price is extremely oversold. So that's the most bullish aspect of this chart, is the extreme level of oversoldness based on MACD. Let's continue. Silver had been quite a bit stronger than gold. Last week, obviously, lost the $26 level and got pushed all the way down to 25. In Andrew's pitchfork methodology, one of the tools we can use is sliding parallels. Sliding parallels, they are lines that we draw that are parallel to the median lines of a pitchfork. In this case, case, if we draw a parallel line and we slide it below this low point here in late November, potentially this level will serve as support and resistance. And we can see that on Friday, silver reached that level and bounced. Got a little bit of a bounce there on Friday. Let's continue. The mining stocks surprised me last week with relative strength in comparison to the metal. And we can see on Wednesday, Thursday, and Friday, we got tails on the bottom of those candles. And of course, tails like that are suggestive of bottoming. And so interesting that the mining stocks were able to hang there in midair while the metals continued lower. In SIL, same idea. Price has now come all the way down to the top of this. This is the downtrending correction channel, and price on Friday came all the way down, tested that level support, and found support there. We had strong buying come in and push price all the way back up to almost to the high of the day, and created this very bullish dragonfly doji. It's very suggestive of a bottom there in SIL. The dollar, surprisingly strong last week. We can see that it finally pushed decisively above this resistance zone and then continued and pushed through the top of the Schiff pitchfork, reaching the 92 level before it obviously ran into enough resistance to stop it there on Friday. So a lot of strength in the dollar. And it was unexpected to me at first, based on what was going on in the other markets. I was not expecting a strong dollar. But one of the things that Richard Russell always talked about was the potential for a synthetic short in the U.S. dollar. And he suggested that condition exists because most assets are priced in the U.S. dollar. And so when market turmoil causes investors and traders to close their positions, unwind their positions, deleverage, they are forced to deleverage into the U.S. dollar. It creates a demand for U.S. dollars as they unwind their positions, which again seems kind of non-intuitive. And so that strength last week in the U.S. dollar may be a short squeeze in the synthetic short position in the U.S. dollar. It's something that I will definitely be watching going forward. And of course, the big story has been interest rates. Let's look at the daily chart first. So this was February 25th, and we had a 7-year note auction. The Treasury auctioned off 7-year notes that day, and the auction was not well received. And in particular, there were indications that foreign demand for 10-year notes was greatly reduced in that auction. That's an 8% increase. In less than 3 minutes, they took interest rates 8% higher before some unknown buyer stepped into the market and pushed them right back down. And then we continued on, and then here we are. This is a week later. This was Thursday of last week, and the Fed chairman had an opportunity to reassure investors. Investors are nervous. Anyone that was paying attention to the bond and note markets last week, or the week of the 25th, they're nervous. What's going on here? Powell had an opportunity on Thursday to reassure investors that the Fed still had everything in control. Well, the Fed didn't do that, and in fact, they pretended that there is nothing to be concerned about in the bond markets. And of course, investors, that's not what they were wanting to hear from Powell, and they pushed rates, pushed them high. It's another bullish. If you wanted higher interest rates, that's a very bullish bar on Thursday, and then continuation on Friday. And so here in the daily chart, that Friday looks like that could be topping action. But if we drop down into the intraday charts, what it looks like is actually this was a breakout. On Friday, interest rates in the 10-year broke above the 1.55 level, rose a little bit, and then dropped back down and tested 155 as support. and support held. So don't be fooled by that potentially bearish candlestick. It is my belief that we had a breakout and a retest, and interest rates will continue rising from here. And of course, we can see MACD full-on bull mode, both indicator lines above the zero level. That suggests that the primary trend is up. Obviously, we're on a buy signal, elevated energy. There's nothing in this chart that suggests that interest rates aren't heading higher. Andrew's pitchfork methodology lets us easily find our next target, and in this case that's here in the 1.75 area. Now let's go back and look. This is the weekly chart, and so we can see that potentially we've got a resistance zone. It served as support briefly this 1 week back in early 2020, and then obviously for 3 weeks there it served as resistance. And so we may be running into some resistance here. Once that level gives way, assuming that it does, very little resistance up here before we get to the 2% level. So got an opportunity to reverse here at the 168 level, but there's nothing in this chart to suggest that this rally is running out of energy. Equity markets, SPX fairly ugly last week, so Thursday made a decisive break below this wider price channel and closed below that level. And then early in the day on Friday, it looked like that trend, that downward movement was continuing decisively lower. And then in the early afternoon, some mystery buyer stepped in and reversed the equity markets higher. Kind of a stick save, got price back into the channel before the close on Friday. So interesting action in the S&P 500 on Friday. Some market analysts are suggesting that the plunge protection team stepped into the arena on Friday afternoon, but who knows. In the Dow, this chart looks healthier than the S&P 500. It looks like Friday's action and Thursday as well, basically just a retest of the 50-day moving average, and then Friday bullish bounce off of that level and a close even above the 20-day moving average. So Dow looking pretty good here. Nasdaq, of course, recent action in Nasdaq has been very ugly. That's a very bullish candlestick on Friday, so big bounce. Wouldn't quite call this a dragonfly. The dragonfly, we'd like a smaller body, a thin body on that long candlestick. So not quite a dragonfly, but a very bullish candlestick there on Friday, obviously from a strong support level, median line of this modified shift pitchfork, horizontal support resistance level. So nice bounce there in Nasdaq. We would expect some kind of rally next week off of this strong support, although the tech stocks are getting hurt by rising interest rates right now. So interest rates are going to have an effect on the Nasdaq next week. Another possible negative effect on the Nasdaq right now is Tesla, which of course is a headline stock at this point. Technically, I guess it's in the S&P 500, but it wouldn't surprise me if investors think of Tesla as a tech stock, and so it could be weighing heavy on the Nasdaq. On Friday, we're looking at a 1-hour chart now. On Friday, price dropped decisively below the $600 level and did so on rising volume, which that's never a good sign unless you're bear and you're short. Seeing rising volume on a sell-off is not a good thing if you're a bull. Friday afternoon, we got a reversal, and Tesla went back up to test the $600 level from below. And that's where we closed on Friday. This rally, this relief rally up to retest 600, happened on declining volume. And so this volume behavior, that's what we expect in a downtrend. We see volume rising as price declines, and then volume falls off as price rises. That's not bullish action in volume. If the 600 level is able to stop Tesla, I would suspect that 500 is going to be tested as support. So Tesla could be weighing on both the S&P 500 and Nasdaq at this point. So Brent, two things going on in Brent this past week. The OPEC Plus, I think they're calling it at this point, decided to continue with their reduced or restrained output levels, and that was unexpected by the markets. And so we see the strong rally last week in Brent crude. In addition, Goldman Sachs increased their price target for Brent up to the $80 level in 2021. And based on this chart, it looks like we're going to hit that very quickly. So that's the last of the charts for this week, folks. As always, if you get the PDF version of the newsletter, in the back, we've got resources. This is Eloro. Dr. Henney is talking about recent drill results and 10 porphyry systems. Dr. Henney just happens to be an expert on 10 systems, which is good for us as investors in Eloro. Other resources, the books, Bob Moriarty. I'm about halfway through his latest book. It's great. I'll let you know when I finish it. These two books, $25. Invest $25. Get those two books. You'll be glad you did if you're interested in mining stocks. This is my book, Technical Analysis. If you're into technical analysis, you're probably interested in a book like that. Folks, have a fantastic week, and I look forward to speaking to you again.